Good morning, everyone. Today is yet another session of the panel discussion. Today we have the topic is technological innovation in risk management. We have eminent list of panelists here today with us to discuss about the new innovations and how it is affecting the risk management in the modern world. Giving you once again a very warm good morning to all of you. Welcome to our session. So as we know, the risk management is very crucial nowadays, and we have come across and dynamic pandemic now all over the world, and we are still in a recovery phase. So we know that it's an important area is the risk management, and we've seen the ups and downs of the risk management going through this COVID-19 pandemic. So I'm not taking much time, and we have a very eminent panelist here. Mr. Ami Daniel is a co-founder and CEO of Windward, and Dr. Ganesh Natarajan is the CEO of Enuit, and Dr. Gray is the managing partner of Commodity Technology Advisory, and Mr. Joseph Lopez is the digital strategy director for the TradeFlow Capital. So the ground rule for the discussion is we will give 1 or 2 minutes for the panelists to introduce themselves regarding their background and the business they do, and then we will go into the kind of a discussion with the questions we have already, and the last 5 or 10 minutes we will take up the questions. So I will introduce first Mr. Ami Daniel is a co-founder and CEO of Windward. Ami, please.
Hey guys, pleasure to be with you. Windward is a shipping plus AI platform, best in class. We help energy organized traders, shipping companies, banks manage different kinds of risks, including compliance risks and counterparty diligence. And happy to be here today.
Thank you, Ami. Next is Dr. Gary.
Yeah, my name's Gary Vasey. I'm with Commodity Technology Advisory. We are the leading analyst in the CTRM and related software space. We have a website called CTRM Center, which you may be aware of, but we post all of our research, opinions, insights, etc. on that website. And I've been involved in ETRM, CTRM software since 1996.
Thank you, Dr. Gray.
When ships were made of wood, and people were made of metal.
Yeah. Sure.
Yep.
Yeah. Thank you, Dr. Ganesh, please.
Good morning, everybody. Nice to be here. My name is Ganesh Natarajan. I'm a Chief Operating Officer for Enuit. Enuit is a truly multi-commodity ETRM and CTRM vendor. We specialize physical commodities across power, gas, LNG, oil, metals, concentrates, everything. I am based in London, and I'm here to share what I know from a technological standpoint with the rest of the panel. Good to be here.
Thank you, Dr. Ganesh. And now move to Jos Manuel. So Jos, please.
Thank you, Dr. Sadar. My name is Jose Lopez. I work at TradeFlow Capital Management. I'm the digital strategy director here. We are a commodity trading fund. We're very funky in the sense we're very technology biased. We're very fintech. We use a lot of artificial intelligence, IoT, and probably what makes us successful is the way we risk management. Therefore, this panel is perfect for us to explain what we do. It's an honor to be here.
Thank you, Josh. And last, not the least, and myself, Dr. Sadar. I work as a commodity risk control director in Savola Group. I've been in this industry almost 2 decades in different areas, basically the grain, energy, metal, and all in the same role of commodity risk management and price risk management. Happy to be here, and I'm welcoming you all again to a very nice session. Okay, first of all, my question goes to Dr. Gray. Since we are in a CTRM world, ETRM world, and it's an energy trading week, we can't be without any CTRM system. So is CTRM system is a misnomer when it comes to risk, Mr. Gray?
Yeah, historically, it almost certainly is, because ETRM and CTRM have historically been to manage the trading transaction through the front office, through to the back office, the invoice. And risk management has mostly been quite rudimentary position reporting, maybe some additional metrics and things to report on. It's certainly been well after the fact, because most of the transactions were entered into these systems historically after the fact. So yes, it definitely is or has been a misnomer. But what we see happening now is the emergence of more modular ecosystems in which risk and advanced risk analytics and better risk reporting, more real-time risk reporting, holistically across all kinds of risk, are being embedded squarely in this ecosystem as a key component within an overall CTRM architecture. So my answer is yes, historically, but I think in the future this is changing, and it's changing quickly.
Yeah, thank you. And my next question is to Natarajan, since you are from in CTRM industry directly, and we have seen we are talking about the digital transformation moving into the cloud and technical investment to their trading the risk landscape.
Mm-hmm.
What are the learnings from those investments to increase the risk management capabilities? Are we balancing it? Because it's a huge investment, the same way the implementation, but what is the learning if you consider it a CTRM system in point of view of the modern technology? And what's your view on that?
I think that's a great question. Actually, from my view, Dr. Sadar, right, it's very, very simple, right? You guys have to think about, all of us have to think about the first principle, right? Whatever technology you're talking about, AI, deep learning, machine learning, or moving your systems or your infrastructure to the cloud, I think it's all boiled down to three things, right? One is, am I having the access to the right data at the right time, which means that close to real time, as Gary said. And second thing is, can I actually have the right data analytics to convert my data into insights, right? An investment in the data infrastructure is rising, especially when you're talking about the physical commodities, people are talking about digital cargoes, digital e-documentations. People are trying to not solve all the problems in a single system. So people are bringing in the ecosystem to actually optimize the value chain, right? So digitalization or digital transformation it's kind of a loosely used word, but the real value is you have to look at the total value chain and try to enhance your investments around what is the value I'm trying to do by the system investment. And overall, it is pushing towards access to the right data at the right time, analytics, and to get that, you have to do investment in the data infrastructure. And fourth is you need to also have a different kind of a skill sets for the commodities people who are actually the end users as well as the IT. I think it's a holistic change. I would just say learnings is basically if you don't have a very good use case about why you do what you do, most of the time the technology investment is being only seen as a technology investment, not as a business value chain enhancement. So, but if you have to ask me, Ganesh, 5 years before, digitalization was a buzzword. Right now, people are able to tie back their use case, why they do what they do, towards the value they want to get from their system vendor or from their own IT teams or the business teams. I think the learnings have to be tied back to the use case, why a certain business is trying to do what they do, in my opinion.
Thank you, Ganesh. And see, this is I purely agree with you, because we have a saying that the garbage in is garbage out. You know, the quality of the input data is very important if you're investing in a CTRM or ETRM system. So the analytics and everything will come into the next stage, but the quality of the data you're capturing, that is very important for a system or digitalization concern. Okay, I agree with you. And next we are moving in. Nowadays, everybody is talking about the AI, artificial intelligence, machine learning, and big data, and all these things are the new words in this kind of world. And my question is to Mr. Ammi, and what's the importance of AI today in this demanding world? What's your opinion?
Yeah, let's take a step back. You know, AI is just a fancy way to do stuff. Basically, you could do the same with rule engines if the problem is simple enough. I think just in our space, specifically in shipping, there's just so much complexity that if you just throw rules at it, you just won't get there. As well, if you throw analysts, you won't get there. So the importance of AI is just to get repeatable results, collapse time to decision, not spend 2.5 days per trade, because otherwise you're not going to be making money. On the one hand, on the other hand, you're just going to be having yourself with a lot of risk. So we just use AI to do that at scale, collapse time from 2.5 days to 2 seconds. And then you can either reduce your risks or optimize your operations, just find more ways to make money, whether it's bunker trading, whether it's oil trading, whether it's LPG trading. There's a lot of risk. By the way, just I think one last point on my end, the risk is not just from sanctions from the US or something. Actually, the banks are becoming the regulators. So there's been some rumors in gun war and what's going down with gun war at this point in time, which is not as optimistic, I think. So, and I think that case shows you that the banks are really the lifeline of commodity trading. So for me, AI plus risk management is also a way to make sure you keep that lifeline of credit coming up.
Thank you, Ami. I agree with you. And my next question goes to Mr. Jaws. And how long does it to implement a true risk management platform in a company with data analytics, automation, and AI implementation? Because why the question is important? Because if you see, the industries are in a different way. You know, the way its geographical location has a very important, as Ami mentioned, that there is a sanction is a very important thing. And if you see, the energies are concerned, the energies are more focused on the Middle Eastern region. And if you see in the Middle Eastern region, I want to point out there are a lot of countries are in a sanction, and so many regulations are in place. So what would be the normal timeline for these kind of CTRM or ETRM implementation, especially on an EA implementation kind of thing?
Yeah, so Dr. Sadar, I think that's a very good question, because it really depends on the size. It depends on how deep you want to go into your system. To me, to be fair, the real answer would be it's an ongoing process. It's not it starts at 0 and it finishes at 1. It truly is an ongoing process. From the perspective, you create a skeleton. What are the basics? What do you must have? Okay, and that is going to take you from 3 months to a whole year. It depends on how complicated, how fast are your developers, how easy is to integrate that. It's actually a process where you need to integrate the whole of the company. So it's not only the people that is taking that decision, it's the people that is inputting that data, is the connections, is the developers, who is reading it. That's why I'm saying that it's an ongoing process for us. I can speak by my experience at TradeFlow Capital Management. In the whole year that we've been here, the system was already in place when I arrived. But the last 12 months have been thriving in how to improve those connections, how the own developers are studying how they make the predictions more accurate. What are we missing? How can it be a challenge to make it more efficiency, right? So yeah, ultimately, I would say the right answer, this is an ongoing process. The sooner you start, the better, because as Ami and Ganesh were pointing out, the importance of the decision making is that you take it at a specific time when they have to be taken and when you have the right information. If information arrives 2 days late and your boat is already in a different port, it's too late.
Yeah, I agree with you, because if you see the industry is concerned,
not boat, ship.
Yeah. Yeah, I mean, yeah, especially the ERP systems, you have the system, the company may be running in Oracle or SAP or any other ERP system. The integration with the ERP and the CTRM is a huge lot of challenge involved, and it may create a lot of complications. So it's a big challenge in a different industry environment implementing a CTRM or ETRM system. I agree with you totally, Josh. Yeah, next my question is moving to an enterprise level to Dr. Gray. Our enterprise risk platform and advanced risk analytics and emerging software class, what's your opinion on that?
Well, I think this goes back to the first question around CTRM, ETRM, and whether it's really a misnomer and has much risk management. So what we're seeing is that those people, particularly that have legacy CTRM, and are dealing with this environment that we're all living in now, where, let's face it, you could talk about the perfect storm, but actually it'd be like the 100-year superstorm, wouldn't it? With an energy crisis and geopolitical risk and the green ESG stuff all coming in. It's difficult to know where to look next. Everything's shifting, everything's changing, and it's all moving so fast. And everybody's exposed to all of these risks, both old risks and new risks, of all different types. So the fastest way to deal with this is to bring in a sort of risk platform at the enterprise level, or to have a strategy around developing a risk platform at the enterprise level, which pulls in information that's required from all the different underlying solutions, which might be multiple CTRMs, it might be a commodity management system, an ERP system, and an ETRM, for example. And there you can actually start to perform enterprise risk and really try to get a control and a grip on the business. And you can do that in much more of a real-time manner if you're pulling in the data on that sort of a basis. And then advanced risk analytics, this is filling the gap that most legacy CTRMs don't actually deliver, which is some of the more advanced mathematics that people want to deploy, or some of the more advanced modeling, even things like stress testing and that kind of risk stress testing is not feasible in many CTRM solutions, certainly not in a real time or a timely basis. And so we are definitely seeing vendors coming to the marketplace with solutions that look more like advanced risk analytics. It's got the trading transaction functionality, but it's got much more in terms of risk analytics, much better reporting. It's built on a different type of architecture, so it's faster, it's more real time or close to real time. And then we're also seeing these other solutions come to market, which are more of these enterprise overlays, which are built to suck in information and then allow risk operators to play on top. So definitely there is a major shift taking place in the CTRM, risk management, commodity management, software arena right now that we're following with interest.
Yeah, true. Because if you see, the enterprise risk is in perspective of the ISO 31000 and GRC perspective, the governance risk and compliance perspective in an overall level, we need to have an integration. I definitely agree with you because it may come from the different CTRM systems, but there is a consolidation level where the organization can see and comply with the GRC model, the governance risk and compliance model. That is, it's almost all the companies are adopting the good governance practices. So it's very important. And nowadays, what I have seen from my experience is the CTRM system is generally the reporting capabilities are comparatively low. So the people, what they do is they will be using a visualization or reporting tool like Microsoft Power BI or Tableau or R
or trying to access the information held.
Yeah,
because you know the other problem with CTRM is it's data in, but data doesn't come out. So people are trying to use Python and all kinds of other techniques to actually get access to the data locked in their system.
Exactly, I definitely agree with you, Dr. Gary. Thank you.
I think just to touch upon what Gary said, and then just picking up on what Jose said, right? So I think the ERP and CTRM implementation, previously a decade ago, most of the single point of failure is always that integration, because the trading system does not understand the language of an accounting ledger or a journal entry, whereas the accounting system does not understand the language of a trading risk VAR and the risk metrics. The lines are getting blurred, and lines are already getting blurred. From our perspective, again, just to talk few cents about Enuit's product strategy, we are definitely blurring the lines in terms of bringing in that integrated risk, integrated advanced risk analytics, integrated accounting into a single package, right? And if you can't some problems, and then as Gary said, it's data in cannot be data out, then there is no value for any system, whether you build it in-house or you go back and then build on your own with your bunch of quant developers. There's no value if you can't get the data out and then convert the data into insights.
Exactly.
I think open data model is a new normal. It is a must, right, to have any systems in place to actually have an open data model to move the data around your enterprise. Else, what's the point, right? I think that's where everybody's. For me, any technology you just try to bring in, you can actually have 1,000 buzzwords and coming up, deep learning, machine learning, AI, all are good enough. But if you can't actually get the data out and convert the data into insights, I think there's no point in actually applying a huge technology on any platforms or in your enterprises. That's my view.
And on that point, in big organizations, big corporates that actually have heritage systems, it's actually a nightmare. When you have something new and you need to plug it with the heritage one, it's absolutely horrible effort, and it doesn't match. I mean, you just better burn it all to the floor and build it again, right? I experienced that in the past. Luckily for me, that's not the reality right now. But yeah, integrating new systems, I think that sometimes you need to bury what is old, scrap it and build, because there's magnificent systems right now that allow you to have real good information at the right time, which is the ultimate purpose.
Well, this is all tied up with digitalization as well. And I think that when you are going through a digitalization process, you need to take a look at your data, because part of the process of digitalization is becoming a data-centric enterprise, so that data is where you need it, when you need it, in the form that you need it, and it's valid data. And I think this is the problem that we're talking about mainly with integration, is it's moving data around from one place to another and having to deal with all the issues around, do we trust that as a data source? Is it valid data? How do we get the data from one place to another without losing something?
Exactly. Yeah. True.
If I may pitch in, I think just from my experience, sometimes more data requires just a bit of a different workflow. And specifically in the trading industry, if you say different workflow to a trader, you would have about 2 seconds before they turn their head to their screen and keep on trading. And I think maybe that's one of the challenges. I think when you do digitalization, you bring in new technology and new AI and new risk management. Specifically for traders, you need to go very, very carefully around it, or otherwise you're not going to adopt it. You're going to end up spending a lot of money or a lot of management resources and nobody using it, no matter how you try to put a big.
And actually, that's why many of the newer solutions have really well thought through and embedded workflow and approvals, so that you can build alternative workflows through different business processes for different types of people.
Yeah, exactly true. Nice discussion, guys. And my question goes to Mr. Jones again. Is the traditional risk manager been outdated in favor of AI systems and the use of IoT services? And what would be the good one, and what would be the best out of it? So what's your opinion on that, Joss?
I think that the risk manager is a key person here. It's not that he or she gets outdated. He's the one that needs to thrive and push for these challenges. From my experience working in a big bank to my experience working in 2 different fintechs to my experience now working in TradeFlow, the risk manager is the one saying, okay, I need this information. How do I get it? I don't need it yesterday, or I need to forecast my trades for next month, or I need to know what's going up with the prices. You know, how do I connect my systems? Can I use something? Can I use Refinitiv? Can I use Bloomberg? Can I use all of this? How do I plug it into my system to get real updated information at an affordable price, which we're not touching that yet? But pricing, I think it's a critical factor, right? So the risk manager, going back to your question, is definitely critical to push all of this. And I think that the risk manager has to be able to get support from the management, from the CEO, probably from a data officer, which is it's a new C level that is coming more and more, and I think it's one is going to become very normal in the future. So yes, going back to your question, risk manager has to enforce it, has to look for it, has to push it within the organization, and has to be supported by the management.
Yeah, thank you, Josh. And again, my question is, again, we are going back to the system perspective, and my question is to Ganesh. Dr. Ganesh, what's your view on is there any real need of a standalone risk management solution versus an encapsulated risk management capabilities within the CTRM industry? And that, what's your view on that? Because since you are from an industry of CTRM, so what would be the better solution for a risk manager or enterprise to manage their risk? Is a standalone system or an encapsulated?
There are 3 decision factors here, right? Right now, the market is divided, or market is kind of loaded with 3 types of commodity trading systems or a system landscape. Number 1 is you have invested some time back. As Gary said, he has been in the commodity space from 1996. We have some systems which we know, which has been in the early 90s, and then they couldn't update the data. So we call them as monolithics, right? It's data in and they can't get the data out. Or there are some greenfield implementations where people are taking their system landscape very seriously right after the COVID hit, because you don't have the luxury to work in the same office, right? Or people want to get the existing value out of the systems, whatever is the monolithics, and then try to build an ecosystem around it. So if you have a product where you can actually do a proper deal capture, risk and curve management, data analytics, and then bring in the options valuations, or if you have a basic deal capture system which has been built in-house, and then you want to actually start converting your data into insights, the answer is you can actually go for a solution which can do all for you. Or if you really want to leverage your existing IT investments, because you may have spent like 10 years in building your own IT system which suits your needs, but you don't want to get rid of it, and then you want to actually add on some additional capability, you can definitely go back and integrate a point solution to build an ecosystem around you. But the challenge is, when you have a monolithic, you cannot go back and buy a cloud native solution when you have a very closed architecture which you build overall. So you need to overhaul the system. So the answer is between both. It depends upon A, what the business wants to do. B, do you want to leverage your existing IT landscape or fully scrap it and then do it again? C, how do you want to position your risk to the next level? I think the one thing is very, very clear is technology can definitely help. But again, back to the basics, right? You need to have a business case of why you want to have a built-in ecosystem, right? There's no point in actually having a shipping solution on the cloud and a monolithic on the on-premises, and your SAP cannot talk to, or sorry, your ERP cannot talk to the systems. What's the point of having a hybrid model when you still want to run your enterprise with Excel sheets a lot? So I think the decision of business architecture has to come from why you do what you do again. I think the answer is somewhere in between.
Yeah, I agree with you, Ganesh. And see, the example is if we all are in a hedging environment, we do a hedging as part of the risk management. That's all CTRM system do. But if you see, one of the systems we have to see in a different perspective. One is analytics and one is reporting. The reporting is concerned the financial reporting, and very limited companies are providing that kind of packages in the industry now. Especially, I'm talking about the hedge accounting. The hedge accounting modules, end of the day, it will be translated into numbers that will be ending up in the financials of the company, whether they are performing or not. It may be comply with IFRS 9 and IFRS disclosures and all these things. So we are managing the market risk, but the system, I see the big gap in that, managing that. If you see, I have a CTRM system, but I have to again and take it back the data and process it and bring it into the finance language. So that issue is there in the current CTRM market, either it is a CTRM or a ETRM, to translate into the financial numbers, especially the hedge accounting and IFRS compliance issues are concerned. It's very strict. We have to do the hedge effectiveness, respective testing, hedging mapping, and all these components are there in as a post CTRM system analysis, where I can see a big gap in the industry currently. That's one of the point I just adding up with Ganesh. So moving into the compliance side, my question is to Ami. As the compliance challenge is increasing, why data is in itself is not enough to the compliance? Mr. Ami?
Yeah, it's very simple. The question is, first of all, is who does compliance, right? Basically, if you have, it's just in terms of, do you want a trader to have an immediate go, no-go recommendation, or do you want to escalate everything? If you want to escalate everything, first of all, you're going to make less money for sure. Because then you're going to have people stop and say, am I allowed to do this? And in the trader's case, the answer will be absolutely yes, because I want to beat my target. So that's not a good practice. So I think the answer is probably need to provide just a bottom line recommendation for the traders. So when they trade, they can on the spot, without losing time, know what makes sense. But then have and just data doesn't allow that. Just, if I tell you, here's the route of the sailing of the vessel, or the origin of the whatever palm oil, it's just not going to help you. Traders want to make money. They don't want to deal with that. It's just not their business. And actually, the compliance professionals also don't want to just raw data. If something has been escalated, they want to be able to drill down. So instead of why the recommendation is go or no go, and why, and can I approve that? Because actually what we've seen is people look at compliance as necessary evil, but we've seen that if you have very good AI, you can actually look at deals with a finer comb and just will find ways to make money on the local arb that other people can't. We have documented cases like that, people making 3 million, 5 million, 2 million, 10 million, in a single trade, where other people's could not, because they were thinking it's a bad area. The area of Crimea, for instance, all the oil coming out of Crimea and Crimea is pretty complicated. They're pretty complicated areas, but actually the local arbs you can do are quite good because they're complicated, if that makes sense.
Yeah, I mean, and any other points on compliance?
I was going to mention for compliance, I think something that has been very helpful lately, it's the digitalization. That leaves you an audit trail. It helps when you're going to go over compliance, meaning approve it. It's like you have your audit trail, you have your KYC, you have your AML, you have everything, and you've done it at speed of light, and it's automatically recorded, and you have it in the cloud or in various clouds. And same, when you're dealing with the clients, everything is being recorded because it's on a digital format, or at least there's been an effort, And in TradeFlow, for example, we push for that digitalization, and we end up having that audit trail that becomes extremely helpful when we need to talk to authorities, when we need to prove something has been done, and those records are staying in the cloud for 5 years, whatever you want to So yeah, compliance is critical, and that brings us to the topic of the of this panel. Actually, for the risk management, no, you need it has to be embedded within the risk management. Those parameters that Ami was mentioned, it's critical to put to reflect it within the risk system.
Yeah, I agree with you. And another thing is, since we are in a technological innovation, I can't leave this word of fintech in the current scenario. If you see, so a lot of industries, and especially some of the companies in the Europe is still using the blockchain as their contracts in the trading business, especially the commodity trading business. They are using their contracts in a digitalized format, and that will be transferred into a blockchain model, and they're making money out of it. So these are the kind of new innovations are coming into the market recently in the new trends. But so far, the adoption rate is very low, because I don't know it's because of the adoption rate is because of technical complications could be the reason, and people don't want to change. But anyway, just moving into again in the discussion on the compliance side, my question is to Ami, and since you are more focused on the shipping and logistic industry, the compliance is changing nowadays, and it is affecting the value chain. And what's your view on the decarbonization, and especially on the maritime industry is concerned, because we have seen the low sulfur regime and account, and it is coming into the picture. What's your view on decarbonization?
Yeah, I think first of all, that's a big one. Actually, if you look at the traders side, one of the hottest area for growing in trading, how you make money, is carbon trading, and that's going to hit the shipping market next year. So basically, I'm going to crunch it over for you for like few sentences. So there's new regulation by the EU called Fit for 55. The drop dead date is Jan 1st, 2023. As of Jan 1st, 2023, you're going to have a mandatory cap and trade scheme where everybody will be taxed for carbon in and out of the EU, which is basically everybody. And the bank's going to enforce it on everybody. That's a big change, because right now, if you walk down the door and you talk to traders and charters, they're going to tell you they do not account for carbon because it's not in their targets, period, full stop. You could actually make less money if you need to account for carbon, if you don't trade that carbon, and therefore they're not interested. So I think that's coming up. The thing is, it fundamentally requires everybody in all the trading teams in the world that deals with shipping and cargoes to add an additional dimension to their considerations, which is called carbon. So you could have one deal which is very poor on the carbon emission side, but very rich on the money side, and you will be able to compensate it, or be required to compensate on it in another deal that's very poor on the cash side, but it's not very carbon emitting. So you meet your carbon budget, quote unquote. So that's all coming up next year. Everybody will need to do it. There's no way around it. And therefore, probably the right solution is for management to lean in. We've launched a program called Data for Decarbonization for market leaders to work together to finalize how would that influence their operations, contribute data, and join models that are trained on everyone's data, not just on your data, and understand how they can prepare to that case, just make it profitable versus a hard stop to their business.
Okay, thank you, Ami. And I think that will open up another area of emission trading and carbon credits and all this stuff into a new scenario. I think the world going to witness that. So,
I think anyway. I agree with Amy on this one, right? So previously, a couple of years before, do you have an emission certificate? Can I actually capture your emission certificate as a paper trade? Right now, people are talking about carbon credits, valuing your emissions inventory, valuing your carbon inventory. I think whether people like it or not, you have to start tracking your carbon value chain from your origination all the way till structuring. That's like you cannot get away from it, right? But at the same time, it's also a learning for the entire market to take that seriously. For the vendor landscape like us, like Enuit, we need to understand the full value chain of how do you track your carbon from origination. Let's say you're in a metals or a mining company, from the time you're drilling the material out of the earth, and all the way towards the trading midstream, and all the way towards the shipment and logistics and putting in a cargo or in a truck. You just need to start tracking the stuff. But I think it's an interesting landscape. I don't think there is a way out saying that, I don't want to get involved with carbon. I don't think there is no other choice in that sense, to be honest. So,
This is an area where, as analysts, we're looking at it fairly carefully, and we tend to think that there's going to be a lot of innovation around carbon and ESG generally as it relates to all aspects of commodities. But the problem is some of it's going to turn out to be dead ends because you have to have standards emerge and standards have to be put out there by governments. Well, what we've got is over 60 carbon markets globally and growing. There aren't the standards. There are regional and local standards emerging, and so over time you kind of expect that some of this will standardize out. People will eventually have a way of working that becomes a standard practice, and some of the things that have come to market will die away because they were dead ends. That's what we're expecting to see.
Yeah, I agree with you. Yes. It's end of the day, it's a political matter. That's the thing. The emission trading is coming, the Kyoto Protocol is coming, and we have exchanges, Chicago Climate Exchange, even the Global Association of Risk Professionals, GAR. They started recently a new course on sustainable management, the sustainability management. They're more focusing on the carbon credits and carbon trading, emission trading. And some of the industries are hedging themselves into CCX, especially the power industry is doing. There are the coal industry is doing, because they are the main culprit in creating the emission into the world. So anyway, today or tomorrow, it's a very interesting landscape to come into the CTRM system. Maybe in the future, this may be replaced, or one of the portfolio would be the climate or the emission trading.
Well, it comes with really huge risks around trade finance and financing generally. So it's going to be taken very seriously. And I also suspect that in parts of the world where the focus on decarbonisation isn't so rigorous, we're going to see alternative business models emerge around financing as well, which will mean innovation in terms of contracting and developing things and creating new ways to finance projects. So I think it all adds up to a really exciting time, but one where I wouldn't necessarily follow any particular way too quickly, because it could prove to be a dead end, because there's so much, as you say, politicalness around where this is headed. It needs to settle out a bit.
You're actually pointing something. It's a jungle right now for everything that is ESG carbon credits. It's a normal fund like us, we are carbon neutral. We bought our carbon credits. We're carbon neutral. We're very proud. Nobody forces. Has it been retributed by investors? We'll see in time. But what Amy is now saying, it makes absolutely sense. Next year is going to start being mandatory for many companies. But how do you do it? How do you buy? How do you put it in your risk system? At what price do you buy? It's absolutely a jungle, and depending on which geography you're competing with, it's an unfair competition, whether you're based in Europe, you're based in Asia, or you're based in Indonesia, for example. So. Yeah,
you're right. Although a lot of the commodity space, a lot of trade finance banks are European. So I think if you want to, I'm a simple guy, so I'm trying to simplify complicated subjects, maybe because I'm not smart enough. So if you look at decarbonization and if you look what you need to do, if you follow the EU regulation, I think it's a good guide, because most of the trade finance banks fall under it, UK or EU. And therefore you could expect, if somebody lends money from China, I don't know what's going to happen. But as long as you're lending money from anybody European or American, it's probably going to go in that directionality. And that's 60-70% of the Western world, right?
Thank you, guys. And we have 4 more minutes to go. Sorry for that. And we have almost 75 participants currently, so I haven't seen any question answer. Again, the audience, you have any question to the panelists, please, if you can put the questions on the Q&A box in another 1 minute. So we are winding up in 4 minutes exactly. So I'm just waiting for your questions. Can you just put it?
Sadar, you run a tight ship, Tight boat, Jose, tight boat.
It's on the size.
Yeah, there are one question. What about the collateral management? It's from the trade finance side. Can you just brief it in 1 minute, Josh? You can take up the question.
Sorry, I didn't hear the question.
What about the collateral management? The collateral management industry, what are the innovations happening? And just in 1 minute.
I don't know how to address it correctly. On the collateral management side, my point when we're discussing this, if the management is not involved, if it's not supporting you, there's no way you can go ahead with it. I don't know if the public is actually addressing to that point, or is addressing to something else.
Okay, fine. There are another questions. Thank you, Josh. What are the risks we should consider if embarking on an AA program? Anyone can, panelists?
I can take that.
Go for it, Ganesh.
No, bro, no worries. I think Amy can actually add this. I think when you're trying to go for, okay, I want to start doing some AA things in my organization. First of all, you just need to understand the skill set you have within the company, or you need to hire the skill set through that. Second is back to the basics in terms of what is that AA trying to solve? Are you trying to get which part of the business process you are trying to solve faster and better with the AI? It just cannot be just deal entry. It has to be like, I want to talk to the screen and I want all the deals to be entered. I think that's a low-hanging fruit for an AA because it already does that. The third point of before embarking the journey is you just need to understand the realization you want to take it, because it takes some time. It is not about the technology. It's not about what AA tools you want to bring in or what kind of skill set available in the marketplace. It's about what is the value you want to trying to realize. It is okay to take some time before you start the journey, because once you start the journey, you need to at least have as a footprint data. Correct. Yeah, correct.
Thank you. We have a limited time and we're just winding up. Thanks for all questions. We will be reverted back. Thank you, the panelists, Mr. Ami, Dr. Ganesh, and Dr. Gary, and Joseph Lopez. And we are thankful for your patience as well as your interactions. Thank you very much. Have a lovely day ahead. Thank you.